According to the Securities and Exchange Commission, the popular investment guru, Michael Burry, liquidated all his holdings from his U.S. stock portfolio to buy a single holding in the second quarter of this year. Burry has been around for a while and has grown to be a force in the investment world. After the 2008 saga, many other investors have keenly tracked his movement. The Scion Asset Management Fund manager rose to recognition after making some timely calculations ahead of the 2008 financial crisis. What he did is simple. He bet on economic collapse, and just as he envisaged, what the investors dreaded happened right in front of the world. Burry's moves were spot on, almost like he foresaw what would happen. His decision was nothing short of the best. So when he sold his investment recently, there were loud whispers everywhere, leaving people to wonder if the history of 2008 is about to repeat itself. Till today, Burry is tagged as one of the investors that recorded profits during the period. He made a great deal of money for his investors and himself during that time, then took several years off and now has been back for some time. Welcome to Financify, the #1 finance and economics channel dedicated to giving you the most accurate and up-to-date information on YouTube. If this is something you would be interested in, then subscribe to the channel with notifications on. Michael Burry isn't called the Big Short for nothing. He earlier sold all of his investment portfolios in August of this year. Not to forget that Scion Asset Management revealed he bought 500,000 shares of the Geo Group in the filing and is worth $3.3 million. The Scion's portfolio includes 11 stocks worth the whopping sum of $165 million minus the unstable options it held against the 206,000 Apple shares. Among the stocks he sold are Google's parent company Alphabet, Facebook's parent company, Meta Platform, Bristol-Myers Squibb, Booking Holdings, Sigma Corp, Discovery, Global Payments, and Nexstar Media Group. Burry did something similar around the third quarter of last year. He knifed up his portfolio, slashing his 20 holdings into 6, reducing its value from $140 million to $42 million. Similarly, Burry got in the news last year after betting against Elon Musk's Tesla and Cathie Wood's ARK Innovation Fund and investing in GameStop before it became a meme stock. Burry took to Twitter to say that the 18% gain in the tech-heavy NASDAQ Composite Index since the third quarter is likely to reverse. Burry, who deleted his tweets, frequently writes on Twitter, "I can't shake that silly pre-Enron, pre-9/11, pre-WorldCom feeling." He was hinting at the 3 events that led to an approximate fall of 75% in the NASDAQ between February 2000 and September 2002. As reported by Business Insider, ardent followers of Burry interpret his decision to liquidate his portfolio as a bad sign for investors. Sometime last year, the Scion boss analyzed that the owners of meme stocks and cryptocurrencies are moving toward the mother of all crashes. Recently, he also told investors not to get too enthusiastic about the recent stock recovery, as previous downturns have seen many temporary rebounds before finally crashing. Following his decision to sell everything last quarter, Burry also made a very off purchase. He bought more than 500,000 shares of a private prison operator, the Geo Group. Unbelievable, right? The investor cashed out his entire $200+ million stock portfolio last quarter. Then he bought $3.3 million worth of private prison stock. This could mean just one thing. Burry is going all in on the America is doomed thesis. Analyzing his decision, we think there are reasons behind his actions, and mind you, the reasons are multifaceted. 1. If Burry's predictions materialize, then unemployment rates will soar. Typically, when unemployment rates soar, crime rates do too. Burry's bet on Geo Group appears that crime will rise dramatically over the next year as the U.S. economy crumbles into a deep recession. Another reason for his actions could be political. While former U.S. President Donald Trump was in service, he supported private prisons, increasing the value recorded. Resultantly, Geo stock increased significantly. According to pundits, Burry could be making a simultaneous bet on rising crime rates and a coming red wave in this year's midterm elections with his purchase of Geo stock. Michael Burry is a legend. He's a genius and a master of financial markets, and he's someone you should always listen to when stocks are crashing. Now our 2 cents to you, Michael Burry is still just a man susceptible to miscalculation like everyone. He doesn't have a magic mirror locked up somewhere predicting the course of markets. Like the rest of us, he uses research, math, and logic to guess where stocks might go. You should also note that his market crash predictions haven't always been as accurate as they were in the past. For example, in 2017, Burry called for an imminent stock market crash that never materialized. We believe the best thing investors can do with the shocking information that Burry sold everything last quarter is this: acknowledge it and move on. The fact that Burry's saying that if inflation continues, stocks are doomed doesn't mean it would happen. The bulk of evidence today suggests inflation is meaningfully dropping. Inventory levels are rising. Commodity prices are crashing. Energy costs are falling. Home prices are starting to drop. Wage growth is slowing. For now, All the major drivers of inflation are trending in the right direction, and if these trends persist, stocks won't crash, they will soar. This is why it's not advisable to sell everything as Burry did. So, should you follow Burry's lead? Ultimately, there are a few reasons investors might not need to follow Burry. As mentioned above, Burry's new investment is fairly a small stake and not exactly meaningful in the grand scheme of things. Secondly, looking through about a 5 to 10 year record shows that shares of GEO Group have poorly crept over the past decade. While shares may be getting a short-term bump presently, many investors would be better off simply investing in companies that have created long-term value. Why? The GEO stock doesn't have a record of creating good returns for shareholders. GEO Group, with a market cap of less than $1 billion, is a company that provides private correctional, detention, mental health, and residential treatment facilities in the US and overseas. While Burry's investment in GEO Group certainly raises eyebrows, here's a reason I don't think it lives up to some of the hype it has been getting online. It's not a particularly big bet for Burry. Burry owns 500,000 shares of GEO Group with a reported average purchase price of $6.60, making it about a 3.3 million position for him. Although this sounds like a large position, it's not a big investment as far as institutional investors or hedge funds are concerned. For instance, during the first quarter of 2022, before Burry sold out of all of his stocks, his portfolio was worth $165 million. So the $3 million investment, it's not as if Burry's investment in the GEO Group is huge. Well, this isn't to say that GEO Group isn't without merits, which likely also have played some part in persuading Burry's investment. Without delving into politics, the company's core business is providing private correctional and detention facilities, which some investors will always shy away from, and that's the loophole Burry is capitalizing on. There is certainly some merit to this viewpoint, and GEO Group could be a beneficiary in this scenario. Also, the position could be a bet by Burry. Many analysts believe that Republicans will gain control of one or both houses of Congress in the upcoming midterm elections, which could lead to a return of policies that are tougher on crime. The take-home here is to use Michael Burry's doomsday thesis to acknowledge the risks, then plunge into a potential stock market boom with lucrative stocks to double your money in a year. So will you be doing the same as Michael and selling all your stock holdings? Let us know in the comment section below. Make sure to subscribe to not miss out on any big finance news stories.